So you might find this hard to believe, younglings, but a couple of decades ago, in the last century, the iPhone simply did not exist. The internet was for the privileged, and if you were lucky enough to have the internet at home, it sounded something like this. But in the last century, in a world with no iPhones, there was a different kind of king, the Blackberry. With its ever so popular Blackberry Messenger, which basically is another version of iMessage, it was obviously the weapon of choice for people who work on Wall Street all the way down to streetwalkers. Back in those days, having a way of messaging somebody for absolutely free was unfathomable, and Blackberry capitalized on this, and then evil Tim Cook went and copied it and destroyed Blackberry by inventing the iPhone and the iMessage. So when the evil corporation of Apple and Tim Cook did unleash their death weapon that is the iPhone, it obviously ruined Blackberry as a company, and ever since then, they found it pretty hard to make ends meet. One by one, Blackberry users were converted over to the dark side with Apple and never to be seen using a Blackberry again. But Blackberry still does exist. It sits ever so quietly in the bottomless pit at the bottom of the stock market, scraping together earnings reports and sitting ever so quietly. Occasionally you do have a spike when CNBC or Jim Cramer mentions this ticker, or even when some apes on a website called Reddit seem to pump this stock up because short squeeze is life. But the downside of Blackberry, whenever you see these spikes and it looks like the stock might just be getting going again, it sort of falls back down to reality. The stock chart looks like it's giving you the middle finger, or a new terminology that I just learned, it looks like Satan's erection, but Blackberry does for sure look like it's just a simple pop and drop. This is a question we need to ask: is it different this time? And the simple short answer is no. No, it's not. In this video, it's going to be a different style of video. I'm going to give you 5 reasons why you should avoid this stock like the Black Death. Now again, I am an Apple user. I never used a Blackberry, so it might be a bit biased, but I do feel that a lot of people are talking about Blackberry and not understanding the actual risks with this company. Now, since we were on a trip down memory lane to the last century, do you remember when your mother said never play with the rubber toys under her bed? Yeah, me neither, but I have no other way of tying this into making you smash the like button. So if you feel sorry for me and my mother's toys, make sure that like button is turned blue. And if you want to buy Blackberry, you can do so or even short it on eToro via the link on the pinned comment. Sign up, deposit, make a trade, and you do get lifetime access to our LWT chat room. Now look, whenever I look at buying a stock, and this is something that I've been banging on about on the channel for a long time, I'm looking for reasons not to buy the company. I see a big mistake now in the stock market. People look at what Blackberry is doing, what Blackberry's news is, and then they go and look at the fundamentals and justify why they are horrific. This is the wrong way to invest if you want long-term success. What you need to be doing is finding reasons not to buy the company, which would in turn lower your risk and increase your chances of finding financial security. Let's look at one of the main reasons why I don't like Blackberry stock, and it is a very big reason. If this one simple reason is too much for me in any company, I simply do not buy it unless it is extremely justifiable. And I mean extremely justifiable. One is dilution. If a company is raising money via dilution, selling shares at the market to raise capital, to help them stay afloat, to help them pay off loans, to help them even grow the company, this is not good for you as a shareholder. If we look at Blackberry in the last 5 years, they've diluted you roughly 10% in the last 5 years. Their share count has gone from 531 million to 567 million, so it's probably more like 8%, but still, nonetheless, that's a lot. Let me put it in a very simple way. If you have 5 shares of Blackberry on the market, there is only 5 shares available and you own 1 share. You own 20% of Blackberry. Very basic, right? If Blackberry did dilute another 5 shares, so they've doubled their stock float, and there's many companies that have done more than this, you've still got 1 share. How much of this company do you now own? You now own only 10%. They have taken away your percentage of ownership in this company to go and pay off debts. that is in the case of Blackberry. Now, I know in some situations dilution is needed, and Blackberry, for sure, it is needed. And I'll be straight with you, I was expecting it to be a hell of a lot worse. But still, nonetheless, this is not a good sign. And if you are not interested in losing shares of a company you hold, then maybe Blackberry isn't for you. Now, number 2 is probably the scariest statistic, is their operating revenue. Money they've got coming into the company. If we look over the last 10 years, we can see they used to have in 2012 $18 billion in operating revenue come into the company. And if we look at today, look people, it's not a great picture. They don't even have $1 billion coming in operating revenue. They're currently at $890 million in operating revenue. In the last 10 years, they have lost over 90% of their operational revenue, which is absolutely horrific and non-excusable if you are looking at a solid investment. And let's be very honest here, the stronger Apple gets and other companies in the same sector, the weaker Blackberry is getting. Again, this company, in my opinion, is a very dangerous investment unless they get bought out, which I don't think people would do either when it is pretty easy to buy their competitors at a much better fundamental rate. Now, the third reason, Blackberry, of course, is not profitable. That's right, you can't calculate a PEG ratio, you can't calculate a price to earnings ratio because, again, they are not profitable. Which usually I would get comments at this point, it's a growth stock, or of course they're not profitable because they are a growth company, but Blackberry used to earn $18 billion is definitely not a growth company. Maybe it re-entered that stage, I don't know, but for sure I wouldn't class Blackberry as a growth company. So again, reason number 3, they're not actually profitable, and it seems to be quite far away from it. Number 4, why you shouldn't buy Blackberry is they are very far from consistent in terms of earnings and basically every statistic in their filings. If we look at their net profits or losses, we can go back and we can see in 2017 they had a 1.2 billion loss. 2018 was a 405 million profit. 2019 was a 93 million profit. Then the Miley Cyrus came and they lost 152, and then they lost 1.5 billion US dollars. It's not necessarily that they're losing money, it's the fact that they're absolutely all over the place. They're up, they're down, they're left, they're right, and you can't really calculate projected future valuations if the company's earnings look like this. And the 5th and final reason, and probably the most important reason why you should not touch this ticker with your worst enemy's account, is the fact that somebody on the internet with a beard on Reddit, it doesn't matter who, told you to do so. They said short squeeze, they said this, they said that, it got the most upvotes on Reddit, the video got 10 million views. It simply does not matter. Buying any stock just because the internet told you to is absolutely insane. And more to the point, even if it makes sense, you should go away and do your own due diligence and think, if that video has got 10 million views, are you too late to the party? Because I can guarantee you the answer is yes. You might make a quick gain, but YouTube and Reddit and all these other places are littered with people's accounts who thought they made loads of money and in the end lost it all. Now, I know this is a different type of video on the channel, and if you are watching this far, the code word for this video is Blackberry. Drop it down in the comments. But I have been thinking that this is probably more logical in terms of giving out help to new investors, because I think that there's a lot of videos saying, I just bought this stock, and I've done them videos in the past, or here's how I pick stocks. But I think it's more important to find out why I don't like stocks, because then you're sort of having a pre-filter and not wasting everybody's time. If Blackberry looked absolutely brilliant in some of these points that I've made here, I'd then go away and see what their projects are, I'd see who's in charge of the company, what their future looks like, and then we could go from there. But simply put, I'm looking for reasons not to buy companies, and I think that's what everybody should be doing too. We work hard for our money, we work hard for our funds, and why are we just YOLOing into any random company? Whether there's a short squeeze or not, that should not be a catalyst to hold a company for a couple of weeks, days, sometimes even like months. It just is absolutely baffling. A short squeeze could happen, but what if they cover? What if the stock falls down and it looks like Satan's erection? Now look, if you like this kind of video, let me know down in the comments. If you don't, let me know down in the comments. Smash that like button on your way out, and I'll see you in the next one. Take care. Peace.